Welcome to Investment 360, your wrap of the top funds and investment insights in South Africa and beyond. My co-host, Warren Dick, joining me on the desk. And today we talk about unlisted property and investing in multi-asset classes. We are chatting to Amelia Beattie, CIO of Direct Property Investments at StanLib, and Nadir Token, investment analyst at 24/7. Remember to follow us on Twitter. That is hashtag Investment360. First up, property is one of the favoured investment vehicles due to its potential to provide both income and capital return. Amelia Beattie, CIO of the Direct Property Investments from StanLib, is here to talk to us about investing in unlisted property. And we know that you've been travelling extensively. You've got your fingers on the ground, so to speak, across Africa. What's happening in the unlisted property space?
Yeah, the property space has been interesting in the last while. I've been traveling extensively in Africa, as you say. We have been converting our pipeline of opportunities into our Africa Property Development Fund that we launched, and that is going well. But the property industry in South Africa is particularly busy, and there are a lot of things going on and a lot of things happening. You would have seen yesterday IPD brought out the results where the underlying property income return was 4.2% for the half year, capital growth 4.9%. So we look forward to see what the next half of the year are going to bring, and all that within the very volatile listed property sector that's up and down and that's lost a lot of ground, whilst the underlying assets still continues to perform and perform very well.
It's interesting you note that dichotomy, Amelia, between what's happening in the listed space and what's happening at the unlisted space. Perhaps you can just give us some more colour around, you talked about that 4.2% growth in income. Through the three different divisions or subdivisions of property, industrial, retail and commercial. Can you just give us a bit more colour around where you're seeing that income growth coming from and how they compare with each other?
Retail and industrial both have been star performers again in the first half of the year. Offices continue to struggle, and I think it is evident because of the a lot of new stock that is coming into the market. You just have to look around Sandton and see all the cranes up here. Most of these are office developments, and as a result, the secondary office markets are really struggling, and you see vacancies there being significantly higher. So you have a tale of two cities almost in the office space, where B grade and A grade are doing exceptionally well. We are reaching exceptionally high rentals, but the lower end of the market are struggling. Super regional retail continue to perform well. It's such a resilient asset class. I really love it. I love investing in it. It stands the test of time. It just continues to do very well. And as long as we continue to create a sense of place in our super regional shopping centers where people can come, spend their money, eat, be entertained, sleep in our hotels that are next door, I think that sector will continue to perform for this year and also as we go into the next couple of years.
The hottest geographies in your book when it comes to the continent?
The continent, you know,
it's a big place.
It's a big place. You know, I love Lagos. I think it is an amazing environment to invest in. I really like Ghana. I think there's a lot of opportunities there, and it will continue to do well. Uganda is really a favorite of mine. I think there are such a lot of opportunities that just waiting to be converted. And we're not throwing away Kenya because what happened there in the last week. Our hearts go out to the people in Kenya. It's very sad. But we've got a lot of energy and a big business invested there. So we will continue to also invest in that environment. So those are for me, the on the continent that we are passionate about. And in South Africa, Sandton continues to grow. It continues to provide us with great returns. And you start seeing some other areas coming up. We are investing in the moment in areas outside of the big metropoles, and that are really proving to do very well, and I think we'll continue to do so.
Sorry, Warren, you say Uganda is your favorite, and it's actually almost a hidden secret. Not many people know that there are 34 million consumers in Uganda, and it's a relatively small, from a geography perspective, it's a relatively small territory.
Yes, yeah. It's a very well policyed country, and that I think makes for good, prudent management. The AIDS rate in Uganda through policy came down from over 60% to below 20% just through management of policy, and that just it's a secret that that country has, and I think it will really do well as Africa continues to grow.
With the focus in Africa, is it still very much retail?
We like retail, we know retail, and retail is so underserviced in the Africa market. There's so many opportunities where there's just not enough retail. If you go back to Lagos, in Johannesburg, you have 1 square meter for every 1 person that live here of space. In Lagos, that is 0.005. So if you just compute that and you kind of divide the number of people by 4 to make provision for the different income levels, there's some 3,000 square meters of space required in Lagos. That is 130,000 square meter shopping centers. So yes, retail remains a favorite.
With retail being the favorite, what are the other underlying elements that unlisted property is exposed to that you think has got good growth potential?
In Africa, I think offices will show good growth in Africa in the next couple of years. In Lagos, office rental, A-grade rental is around $95 a square meter per month. In Angola, you see that going up to $125. I mean, that's ridiculous rental. So I don't think that will continue forever.
But right now, it's the demand-supply equation that's really in your favor.
Yeah, there's definitely some opportunity to play in that space.
You mentioned 95 and 125 US dollars per square meter. How does that compare with Premier A-grade space in Sandton?
Premier A-grade space in Sandton goes around 200 Rand, so $20 a meter, so that's significant difference.
So that acute shortage, I mean, obviously, I imagine, I just wanted to get a feel for the portfolio that you run. Obviously, you look to buy into buildings, but you also develop them.
Yes.
How big a part of that is developing the properties in your portfolio?
So in our property development fund, it's all developments. We don't buy into that fund. But then we have a number of segregated mandates on the continent where pension funds are looking for property exposure, and we will be and in the process of buying for those funds. We're looking at doing a REIT in Kenya, and for those we would acquire properties.
We just find it's such it's so unusual to hear this, because I think we talk to fund managers and we hear how kind of sick and ailing the economy is, and yet you're telling us that there's still great demand and income growth in urban nodes like Sandton for retail and Premier A-grade space. Any reason for the drivers and why we have this? The general economy seems to be very weak, but we still have such strength in certain sectors. Yes. like this space.
I think we underestimate in the property space the quality of the underlying income streams, which is really what drives the income growth and ultimately drive your valuations. If you are prudent in how you value your portfolio and you do it right, you don't apply unprudent measures, that way you really will continue to get good value. And the thing about property is it's predictable and it's stable. So we can tell today with pretty much 95% certainty what our income growth will be next year and the year after, because you've got long leases and you understand how they trade, how well they trade, and whether in a trading environment they can continue to provide that growth. That's why I'm saying making a sense of place, creating a trading environment where tenants want to be, where customers want to come to, where people want to come and play and spend their money. That's what's driving that growth in that sector.
What about the challenge of liquidity?
Liquidity always remains a challenge in an unlisted property portfolio, and I guess it's priced in. That's why it doesn't. In the listed property space, you have the high premiums to NAV, which really cater for the liquidity. There are ways to deal with liquidity in an unlisted property portfolio. Properties do trade, they just take a bit longer. So you need to find a way to manage it out of the portfolio itself so that you don't significantly impact on the returns. But it's not the case that it's completely illiquid.
It shouldn't be a barrier to
It should
your
not be a
investment
barrier.
strategy.
There are ways to do it, and you can successfully execute on that.
Amelia, one of the countries I didn't hear you say or talk about was Botswana, and I know that De Beers are relocating their head office into Gaborone. Yes. It looks like a very interesting...
You've got an office.
We have an
I've
office.
been there.
We do have an office in Botswana. We run a listed fund in Botswana. The Botswana property market has done exceptionally well. It's a small market. There are only 5 property listed funds, and that's probably as big as it can get. I'm a little bit concerned about the office market. There's been a lot of oversupply of new offices, so it is going to, at some point in time, the same office dynamics that we see here will come into play there. But it's a nice market in Africa to get into. It's easier to do business there, and it's also the first country outside of South Africa where IPD has actually launched an index. So we've got transparency of information. We actually can compare how the different counters trade.
You talked about this interesting interface between what happens in the listed property sector and your own, and obviously the listed property sector can act as both buyers and sellers to your assets. At the moment it seems very busy. We've had this new REIT structure that's been incorporated, and there seems like the listed property sector has been going through a boom up until the correction in May. So what effect is that having on your business? You're obviously competing for assets. You want to buy these properties that can give you great yield income. What's the effect been of the listed property market on your portfolio at the moment?
Look, I think we shouldn't underestimate the listed property market. It hasn't stopped with trading altogether. It's still doing deals, it's still looking for properties. It's just perhaps the value at which it trades is a little bit different. And there's a lot of trade and deals that we are engaged in at the moment, either on the buying or the selling side. I mean, as a portfolio manager, you always have to rebalance your portfolio. You continue to do that through transaction activity. And yes, I have maybe seen a little bit of a slowdown in the number of deals, but there are still deals going. And it's not that the deals have dried up all of a sudden and that we don't have competition in the market. The listed funds that are managing for income will continue to buy because that is what's providing this growth. And they also, the listed property sector also drive this growth that IPT has brought out, and they just have the dynamics of the market on top of the underlying portfolio.
Amelia, thanks so much for your time. Amelia Beatty is CIO, Direct Property Investments at Stanlib. After the break, we talk about investing in multi-asset classes with Nadi Token from 24/7.